Right now, it seems that every stock is down and that there's no place to hide your money. But some will say that this presents a great buying opportunity for the long term, and I couldn't agree more. But just because a stock is down doesn't mean that it's a good value or that it's a good buy. In today's video, I picked out 3 stocks that I think are at good values right now and that are tremendous long-term dividend growth stocks. There are recession fears coming with inflation and all sorts of economic pressures right now, so I've made sure that these stocks have been through recessions and increased their dividend throughout recessions. I looked at the business model of the companies and determined whether they would be fine during a recession also. If you're new here, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. It would mean a lot if you guys could subscribe, turn on post notifications if you find content like this valuable. I post videos about my portfolio. I'm really transparent about it every month. Updates on stocks that are down and videos like this. So it'd mean a lot if you could do that. Smash the like button while you're at it. Subscribe once again. Turn on post notifications. And of course, roll the intro.
Hello, I like money.
The first stock on this list is going to be Target, stock ticker TGT. I made a video on why the stock fell, but basically it fell 30% in one day because their profit margins have been crushed due to, soaring energy prices, etc. These are issues that Target and their competitors have to deal with as well, so I'm not that concerned about it, to be honest. If you guys want to see me go in more in depth about it, please go check out that Target video. I'll leave a link to it in the description. But Target has a cult-like, customer base, a very loyal customer base, and their customers are spending more money on the less profitable items during this time. And guys, we are long-term focused, so, Target only have to deal with these problems for the next 2 years.
Man, what are we talking about? Come on, man. Come on, man. Come on, man. Come on, man. Come on, man.
But guys, all jokes aside, a great company like Target with such a strong brand shouldn't be going down to 30% in one day. And if I were to bet my money on it, I'd bet that institutional investors, the big money, is probably most of the people selling out of it right now. It's very ironic because they're the ones that are focused on trading stocks every 2 months. Target is down 43% from its 200-day moving average. Target is currently trading at a forward PE ratio of 15.38, which is really cheap for the company. Target also recently announced a 20% dividend hike, which, tells me as an investor that they aren't worried about these short-term problems. Target's also been increasing their dividend for 54 years and have been doing share buybacks. They did not cut their dividend during the 2020 or the 2008 recession as well, which gives me confidence that if we do go into a recession, they will be just fine. The next stock I have is the greatest company of all time, which is Microsoft. Now guys, people like everything money say that Microsoft is not at a good value right now. Currently, for Microsoft's great economic moat and their business model and the way that they've handled recessions previously, they're trading at a 25.85 PE ratio. I think that this is definitely a good deal. Microsoft's cloud computing business is definitely essential and businesses won't stop subscribing to Microsoft's business. As I've mentioned earlier, personally, what excites me most about Microsoft is probably their gaming and their Game Pass. I feel they have a lot of growth potential. They also have a really good dividend with a strong CAGR. Microsoft also aggressively buys back shares, which increases your value as a shareholder in the company over long term. As I mentioned in the intro, I want companies that will continue increasing their dividend during recessions. Here, you can see that they didn't cut their dividend during 2020 or they didn't cut their dividend during 2008. They have a really low and sustainable payout ratio as well, and they've consistently grown their dividend at a high rate as well. Microsoft isn't on much of a dip compared to these other companies, and I don't think is at a really cheap valuation for the company whatsoever compared to the other two, but I think definitely it's a great stock to own during a recession and will hold up during a tough time. And guys, the last stock I've talked about a lot, and it's one beloved by our good friend Orlando Littlejohn here, who just has nothing but nice things to say about and great positive things to say about Starbucks and how much of an ethically great company they are. So thanks for the comment, Orlando. But guys, in all seriousness, Starbucks hit its high at about $120 and, has, completely collapsed since then. Starbucks is currently trading at a forward PE ratio of 20. Usually Starbucks will trade at a forward PE ratio of the high 20s, so this is definitely a good price for it. Starbucks has great pricing power, a tremendous brand, and will do fine during a recession. Right now, nobody wants to touch Starbucks, which is a great sign and a great buying opportunity because I love to touch companies that, people have out of favor. They don't want to touch whatsoever. Those are the companies I want to be a part of right now. Don't get me wrong, Starbucks would get hit during a recession. Starbucks has been paying their dividends since 2010, so they've only been through one recession, and they closed their stores for about a month, and they kept paying their dividend. Starbucks has been one of my favorite companies so far in my investing journey, and I'm so happy it's on this great dip. I will look to buy in the low 70s, high 60s if it even hits that. Tremendous price right now, great dividend growth. I'm curious to see what they'll do about their next CEO and their management. Starbucks suspended their share buyback program to invest back into their employees, but hopefully this should lead to better customer engagement with their employees. During times like these, I want to buy stocks that are highly out of favor like Target and Starbucks. Now, here's a clip from Warren Buffett on what to do during a recession.
We're a net buyer of stocks over time, and just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. So when stocks are down, we're going to be buying on balance, and who wouldn't rather buy it, at a lower price at a higher price? People are really strange on that. I mean, because most of your listeners are savers, and that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price, but they have that feeling that they just feel better when stocks are going up. If you worry about corrections, you shouldn't own stocks. I mean, if you can't take your stock going down, it's going to go down sometime if you own a stock, so why worry about it? I mean, the point is to buy something that you like at a price you like and then hold it for 20 years. And you should not look at it day to day. If you bought a farm or apartment house, you wouldn't get a quote on it every day or every week or every month. So it's a terrible mistake to think of.
Guys, in conclusion, just because stocks are down doesn't mean that they're a good buy at the time, and that you guys should always just keep dollar cost averaging, be patient, and find companies that are out of favor and that you've recognized are great companies fundamentally. Thanks a lot for watching this video, guys. I really appreciate it. A little update on the channel. I'm going to start uploading every Tuesday and Saturday, so, 2 uploads a week. We're on summer break now. Let's go. Yeah. All right, all that good fun stuff. Guys, keep doing dividend stocks, not drugs, and of course, have a good one.